Hello, my name is Crystal Comber, and this is lesson number 2 on pin bar trading, daily Forex price action strategy. Today I'm going to go over using the pin bar break method to enter and exit Forex price action trades. If you did not watch lesson 1, I highly suggest that you go back and watch that before continuing on with this lesson. Before we get started, we must always start with a disclaimer. Please feel free to pause the video and read the entire disclaimer. But when trading Nadex, IG, Forex, or any binary options, any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised that you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. Using the pin bar break method to enter and exit Forex price action trades. In my previous lesson, I taught you what pin bars are, how to effectively identify them, and gave a few examples. I hope that you did your homework and spent some time looking at your daily charts this past week to get a good feel of what you're looking for. If you did not tune into my previous lesson, like I already said, please do so before continuing on with this one. Now I'm going to introduce you to the pin bar break method, how to effectively use it, and how to plan each day of trading ahead with set entries, stop losses, and take profits. So what is the pin bar break method? The pin bar break method is based off of price breaking the nose of the pin bar for the next day. By setting your stop after, or your stop order after the formation of the daily candle, or any time frame. If you use other time frames, that's fine as well, but currently I'm only going to be going over just the daily candles, okay? But by setting that stop order after the formation of the candle, your trade will either fill and hit a stop loss or take profit, or it won't fill and there'll be no money lost at all, so it won't even matter, okay? If you don't know what a stop or limit order is, okay, a stop order is an order that is put into place when the trader wants price to equal X price higher for a long position or lower for a short position instead of the current market price. A sell stop would mean that the trader wants price to reach a lower target than the current market price before the short or sell position is to be executed. A buy stop would mean that the trader wants price to reach a higher target than the current market price before the long or buy position is executed. So basically with a stop order, you want price to actually be worse, okay, if you want to kind of look at it that way, than it currently is for a buy or sell. Let's say price is at 1.200 and you want price to be at 1.200, 1.100, okay, just hypothetically, before you enter the sell. Okay, now obviously you're not going to make as many pips, but the way to think about this is that the trade is not valid if it doesn't reach that price. So if it doesn't break that nose, then the order isn't valid and you're not to enter it. Okay, so that's why we want to enter at a price that's basically, you know, going to bring you less pips than entering at market price to gain more pips, okay? Because if the trade isn't valid, you don't want to enter it, okay? A limit order is an order that's put into place when the trader wants price to equal X price higher for a short position or lower for a long position. A sell limit would mean that the trader wants price to reach a higher target than the current market price before the short or sell position is executed. A buy limit would mean that the trader wants price to reach a lower target than current market price before the long or buy position is executed. So with a limit order, you're going to make more pips. But the same thing, you know, that trade is not valid until it reaches that lower price for a buy or long, or a higher price for a short or sell. Okay. So setting your stop order. After the formation of the daily pin bar, or whatever time frame you use, you can set a stop order so that upon the break of the nose of the pin bar, the order is executed with a set TP and SL order, take profit and stop loss order. If the order fills, you are aware ahead of time what the potential loss and profit levels are. I put ahead of time twice, sorry about that. If the risk to reward is not favorable to your risk management plan, then don't even set the stop order, okay? Wait for the next setup. There's nothing wrong with waiting, all right? It's better to wait for a good setup than to just enter and you know, have a trade that goes against you, okay? And it takes out profit from previous trades, okay? So make sure with whatever risk management plan you use that that take profit and stop loss are favorable to your plan, okay? So here is an example. There are two examples actually for a bearish and a bullish pin bar. We're going to start over here with this bearish pin bar. Okay, we're on the Euro USD daily chart. Okay, excuse me. And the cool thing about this is it does not have to be a daily chart, but I'm teaching you guys this so that it's something that you look at each day and you get used to this before actually trying to identify pin bars on lower time frames, and you know, and setting those you know, stop orders quicker than just your daily analysis. Okay, so definitely feel free to check them out in other time frames as well, but I'm just going to focus on the daily candles at the moment, and probably for the first few lessons here that you go through. I want you guys to practice and really learn it first. So for this bearish pin bar, okay, right here is our bearish pin bar. You see that long tail, small body to the downside, and a short nose. Okay, that's a very good pin bar. The price, the next thing from the previous lesson, okay, price of the body closed within the previous candle. Okay, so it's still a valid pin bar. And the last thing is that the body is, or excuse me, the tail is at least 3 times the body height here. Okay, so this is a valid pin bar. So now, what we want to look at is you're going to, geez, excuse me, you're going to set a sell stop, okay, because we're selling. This is a bearish pin bar. We're setting a sell stop at 10 pips below the break of the nose. So here's the nose, okay, so 10 pips below that, see this line here, is where you're going to set a sell stop at. All right, so you, if price on this next candle reaches 10 pips below the break of the nose, the trade will become valid and be filled. Okay, you're going to set a stop loss at 10 pips above the high of that candle. So right here is where you'd set your stop loss. All right, and here is the previous support level. also known as your take profit level, okay? As you can see, price did reach this, okay? So your order would have filled on this candle, and it would have reached your take profit, right? Now, in this scenario, it would have filled, hit your take profit, and then it headed up. In some scenarios, though, you'll see where price will continue, all right? So you can also use a trail stop to gain more profit out of these. But your initial take profit, you want it to be at that previous support level for a sell position, okay? Now, over here, we have a bullish pin bar, okay? So this is for a buy position. Here's your pin bar, all right? First thing to look at from last week's lesson is that price closed within that previous bar. There's a shorter nose and a longer tail. The tail is more than 3 times the body. Okay, here's the body. It's more than 3 times that. Okay, so there's a valid pin bar. And, oops, here. You would set your buy stop at 10 pips above the break of the nose. Okay, so price has to break 10 pips above. All right, and if you notice, it doesn't for a few days. All right, but when it does, it does head to the upside. Okay, now you set your stop loss at 10 pips below that pin bar's low. So right here. If you notice, the stop loss was not hit. The take profit level right here, or your first take profit, TP1, would be your previous resistance level. Now this is the previous resistance. Now, and I drew this longer so that you could see, here's previous resistance right here. So this is what you'd want to set it to. But just another thing to look at is that if you draw it back even further, again, it's a previous resistance level. Okay, so that's just something to look at as well when you're drawing in support and resistance, is to see how far back it goes as well. So your order didn't fill this day, didn't fill the next day. It did fill this day, but you ended the day negative, a negative position, all right? And then the next day, it shot on up. It never hit your stop loss. It did hit your take profit 1. And then you had a potential, okay, if you were using a trail stop. So that means, oh, I'll go back one here. Okay, so that means that once it reached your take profit 1, you can move that, your take profit level up. You know, the next, if you want to do 10 pips, 20 pips, whatever increments work good for you, and then you move your stop loss up to this first take profit level. Okay, so there you got some more pips, and I mean, you could have essentially gained up to here. Okay, and if you notice, that's again another previous resistance level. Okay, so just something to think about, but don't overthink it. You know, just set it to take profit 1 if you want. Really get used to it, okay, and understanding these pin bars. But there's 2 examples for you. Okay, in that example, well, in the previous slide, not above, obviously, you see that the sell stop was set for the bearish pin bar at 10 pips below the nose, with an SL at 10 pips above the high of the pin bar. And the TP was at the previous support level. The buy stop was set for the bullish pin bar at 10 pips above the nose, with an SL at 10 pips below the low of the candle, and a TP at the previous resistance level. So Next week, now that you understand the pin bar break method, what it is, the difference between a sell stop versus versus limit orders, where to place the TP and SL or take profit and SL levels. I'd like you to take the next week focusing on identifying solid pin bar setups first from lesson 1. Use your demo account to set your stop orders for any that do set up with the take profit and the SL levels. If you want to try doing the trail stop, try that out. I'd like you to look back at previous months on different pairs and get a good feel for the outcome of the trades that you'd enter and how they'd impact your trading over, say, a month's time or 6 months' time or a year's time. Okay. Next week, I'm going to go in depth on using the Fibonacci 50% method to get you going in trading pin bars with a very effective method. Now, the pin bar break is very effective. You know your stop loss, you know your take profit, but you should also know which ones to enter and which ones not to, because if they do not follow your risk management plan and your risk to reward, then you just don't take it. All right. But with the Fibonacci 50% method, you can gain a lot more from each trade. From each one of those pin bars, you get in at a better price, okay, instead of just going off of the break of the nose. But there's a little bit more to it, so I want you to start with this, get a good feel for it. This is still a very effective method, but I'd like you guys to be able to gain as many pips as you can, okay? So not only will you have the confidence to start taking trades, you're going to know the limit or stop order, the take profit, the stop loss to enter every day, just by using the Fibonacci and the 50% method. All right, so I will see you next week. If you're interested in learning more great strategies, joining our academy, or checking out our free information on trading, please go to slicktrade.net, and we will see you there.